Welcome to another video. If you're new to the channel, I'm a top author on the TradingView platform, as well as running an educational program and swing trading full-time with my students. Have you ever wondered which is the best way to never lose trades again? Well, and that is exactly what we will be speaking about in this video. So make sure you watch it until the end because the video will be filled with value. So obviously, when it comes to never losing in trading, it's impossible to never lose a trade, right? What I mean by this is that you have to accept the fact that you will lose positions, but there is a way to be always sure that in the long term, you're always profitable. And there are two main key aspects for achieving this. The first one is called risk management, and the second one is risk to reward. And in this video, I will be breaking down exactly which are the best techniques to ensure yourself to always be in profit in the long term. Okay, so if you have a strategy that is completely based on amazing rules, okay, you know how to read the COT data. Now, as you know, we use a lot COT data because basically it gives us insight on what hedge funds are actually doing. But you can have the best strategy, okay? You know how to read the data, you have the best technical rules out there, but if you're lacking risk management and understanding of proper risk to reward strategy, then there is no way in the world that you will ever be able to be long-term consistently profitable in the market. Now let's start by defining what risk management actually is. So risk management is the ability and the fact that you know that you actually have to calculate your risk per trade and knowing exactly how much you're risking before entering the market. So many of you enter the market without knowing how much they're actually risking on a specific position, and it's a big mistake. Okay, you need to know before you take the trade how much you will actually risk on that particular trade. So let's say, for example, that you have a trade and no matter how many pips it is, okay, now here we are on gold, okay, you read that we have here a 647 pips. Obviously you have 6,000, but accounting also for the pipette. Now, what you will do in that particular situation, okay, you know how many pips you actually have, but how do you know that this risk here, this obviously is greater, and this one here, how do you know that you will be risking exactly, let's say 1% of your account? Because in my particular case, obviously if you have a smaller account, you can be risking more per trade, but if you have a big account, there is no reason to risk less, okay? You can be risking 1% per position and you will be perfectly fine because you're happy with making even 3% is a lot of money, so you're perfectly fine. So how will you know that no matter how many pips your stop loss is? Let's say, for example, that you have here a 100 pips stop loss and here a 200 pips stop loss, okay? How do you know that this 200 pips will equal 1% of your account and this 100 pips will anyway equal 1% of your account? Well, that is the reason for which you can adapt your lot size, and that is the reason for which you have to adapt your stop loss. And an easy way to calculate your lot size and knowing exactly how much you're risking before entering a position is, for example, using this position size calculator of my Forex book. You can just Google it in my Forex book position size calculator. And let's say, for example, you have a 100K account, you want to risk 1% per trade on Euro USD. Let's say, no matter if you have a 100, let's start from the first example, okay? You have a 100 pips stop loss on Euro USD. You calculate and you have to put 1.10 lots if you want to risk $1,000 with a 100 pips stop loss on Euro USD. Perfect. What if I have a 200 pips stop loss? Well, if you have a 200 pips stop loss, what will happen? To risk $1,000, what do you have to do? You have to put 0.55 lots, okay? Which is obviously half because the pips is the double the number. But anyway, you can use a calculator like this and you're perfectly fine from the risk management perspective, okay? Knowing how much you're actually risking before you enter the market. Key aspect, right? Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next video. Then let's pass to the second, a very important topic when it comes to consistency in the market. No matter how good your strategy is, you need to have proper risk reward, okay? Because it's many people, all those gurus out there saying, I mean, I have an 80%, 90% win rate strategy, okay? They don't exist, okay? Those kind of strategies don't exist. The holy grail is risk to reward, okay? You will not be right 90% of the times in the market. There is no way that you will be able to do that in the long term. It can happen 1 month, but it will not happen for the whole year. It's impossible, and sooner or later, people that have a small risk rewards, for example 1-to-1, or people that have even less than that, they will get burned out, okay? They will not find consistency in the market in the long term. So how can you basically be sure that in the long term you will be long-term consistently profitable? Well, risk reward will help you a lot with it, okay? Let's say someone is using a 1-to-1 risk to reward, okay? So risk to reward ratio is 1. So they're risking, let's say 100 euros to make 100 euros, okay? But here, this other person is risking 100 euros to make 300 euros. Then what will happen? Let's say a win rate of a decent trader in the market is 50% if he has a good risk to reward strategy, okay? So what happens if you have a 1-to-1 risk to reward? Well, obviously, if you win 5 trades, you will make 5%, right? So plus 5%. You lose 5 trades, you will lose 5%. So total, how much did he make? 0, right? What if you have a 1-to-3 risk to reward? Well, we can easily calculate that, right? If we win 5 trades with a 1-to-3 risk to reward, how much did we make? 15%, if obviously we are risking 1% per trade. How much we lost when we lost those 5 trades? We lost 5%, right? Exactly the same as here, because you're risking $100 here, $100 here, but put in percentage, let's say we have a 10K account, so we're risking 1%, okay? So we lost 5%. So total here, we made 10% by risking only 1% per position and being right 50% of the time. Now, what happens, okay, let's take a worst case scenario. Let's see what happens if I'm right only 3 times out of 10. Okay, here, what does it happen? Well, what happens is that clearly, if we write only 3 times out of 10, we will lose 7 positions, which will give us minus 7%. Then we win 3 positions that give us plus 3%. So overall, what will happen? You're right, we will have only a loss, right? We have lost 4%. While on the other side, we have been right only 3 times out of 10, so 30% win rate. Terrible, right? But if you have a proper risk to reward strategy, what will happen? You are right 3 times, you will make 9%, okay? You will be wrong 7 times, so you will lose 7%. And how much will you make overall? You will make 2%. So overall, you've been right only 3 times out of 10 and you're still in profit. And that, my friends, is exactly how you will ensure yourself that in the long term, you will always be long-term, consistently profitable. So build a strategy that is based on high risk to reward, 1 to 3 at least, and always, always, always control your risk. I'm not telling you that you have to necessarily risk 1% per position, because I understand some of you have a small account. So definitely you can risk more than 1%. I don't suggest you to do it in the beginning. Later on you can do it. But what I am suggesting to all of you is that you have to know before you're taking the trade how much you're actually risking, because it is not acceptable that you take a trade without knowing how much you're risking before you take it, because that is the perfect formula that you have there to actually continuously blowing your account and never finding consistency in the market, which should obviously be your goal if you actually want to trade for a living full time. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education and analysis for all of you. as well as going and checking out the mentorship program. You find the link in the description. It's a very complete program. You first get all the rules of my strategies and then you trade them with me. Each and every day I give you the entry, stops, take profits, showing you exactly how you have to apply the rules that you already learned in the training sessions, as well as answering every question that you have each and every day. So I'll invite you to go and check it out, or go and check out the next video.